Financial markets can be a scary place, and they don't rest for anybody. Our goal here at A1 Trading is to bring you coverage every day so you can stay up to speed on the latest market moves. Before the show begins, remember that trading involves risk, and anything shared in our content should not be construed as financial advice.
I do have some trades on. I am long Aussie CAD.
For these positions, I wouldn't mind holding them for 3 months.
So around 100.5 to 99.5 in that sort of area.
Pulver alerts, I have 100 shares at 11.79. I closed it out today.
Start building your strategy based upon historical data.
Welcome to A1 Trading.
Good morning, everyone. Welcome back to the stream. Sorry, I was just finishing up writing something here. Look at that. October spooky themed live streams. That's pretty awesome. Shout out to the producers behind this. Well, the producer. We are down to our one head producer here, making the stream look spooky as anything as we go into October. Got some cool stuff planned for October, by the way. We're going to do some giveaways. I'll share more details about that in just a second. But we are doing some EdgeFinder giveaways. All sorts of fun stuff is coming in October. October is always a fun month for us. I love Halloween. Does anybody else like Halloween? I think it's probably it's got to be like my top 2 favorite holidays. I think Thanksgiving might be my favorite holiday in the US. It's a little bit of my love for lots of buttery food. The stock market is up today, just a little bit for the S&P, but the NASDAQ actually making a really sharp recovery from Friday's moves. So we saw on Friday a little bit of a hiccup in stocks, but again, once again, the bulls proving resilient, making a push right on back up to the all-time highs, putting in a fresh all-time high in the pre-market session here. Should be interesting to see how markets play out in October. We talked about November being a pretty strong period of time. Let's take a look at some annual seasonality for the S&P 500, just to give ourselves a little bit of a refresher. So we are going into a period of time for historically speaking, the strongest part of the year for the S&P 500 is actually in late October through December. So the question becomes, are we going to get something like that this year too? Now, what's interesting here, guys, is that let me draw in something interesting here. So I've just highlighted where we are in this historical cycle. In the last 10 years, you have actually typically seen some softness in the stock market's performance in the month of September and in October. But interestingly, we've defied that tendency this year. Now, seasonality is a funny thing. And like most strategies, right, most systems or data points, traders, especially new traders, are looking for something that's foolproof, like it doesn't ever miss or it's never wrong. If you sold stocks this year at the start of September, because seasonally it's a weak period for the stock market, this year it was a mistake. This year you gave up a lot of gains because you did that. Now, does that mean that seasonality is a worthless indicator and you should never trust it? No, but that's the sort of mentality that new traders will do. They'll say seasonality doesn't work. See, this one instance where it didn't work means it doesn't work, right? But you have to be really careful with that mindset because, look, markets are not that easy. It's difficult to make a prediction about markets, and it's certainly a mistake to overvalue the indication that one signal gives you. Now, again, this is the cool thing about the EdgeFinder. The EdgeFinder looks at a wide basket of indicators. It doesn't just look at seasonality. It also looks at GDP stats and inflation statistics and all sorts of stuff. right? To build a bigger, full, conclusive picture. The S&P 500 was up. The EdgeFinder was also bullish. It still is bullish. What's up, Lynn? Good morning to you. Thank you for being here. I've seen a bunch of comments that I've missed already. I know I've got a lot of stuff to cover today. It is Monday. Nick, UJ positioning saved by Takashi. Is that that's the new person they voted in right over the weekend? Yeah, I closed my dollar yen longs. I ended up doing okay on that one. Closed this one out for what was the total pippage, as they say, the FX world. So my first entry on dollar yen was a little bit early, but I added a second trade. This is the beauty when it comes to currency trading. This is why I trade in small pieces and I dollar cost rather than, tight stop, big entry size. Tiny trade, and then another tiny trade, and then the overall profit was not too bad. In fact, we closed out on this signal. I closed out 369 pips, which is not too shabby, especially when I was only in the trades for a couple of days. 369 pips. I closed it out as soon as market opened up. Pretty much, we gapped up, and then I just closed out of the trade. So I'm out of dollar yen. I'm still in the dollar. I do have UUP long. I'm not logged into my brokerage at this time, but I'm long UUP, which is an ETF that tracks the dollar. So I've got a lot of stuff. Again, I've got to get through in here. I'll try and be speedy. But I did want to just talk briefly because we're on the topic of October, right? Let's look at some seasonality. The NASDAQ, also historically speaking, we are going into a strong period. So what does this mean? Does this mean seasonality didn't work in September? So does that mean I should ignore it in October and November? No. Again, good trading doesn't mean right all the time. Good trading means you're right slightly more than you're wrong. So if I'm looking at this, I'm saying, okay, if I'm using seasonality as a guide, I should be bullish. I should not be looking to short the market, right? My thumbnail was pretty aggressive on Sunday. I said, is this where the stock market crashes, basically? And my actual answer in the video was, no, I don't think so. But of course, people don't always love when I do that. But look, I've talked about this many times. You got to play the YouTube game. Otherwise, people don't see your videos. Somebody was like, hey, you don't need to be making such dramatic thumbnails. I'm like, well, if I didn't make this dramatic thumbnail, you wouldn't even be watching this video. You have to play the YouTube game a little bit. But if you watch my videos, I always share exactly what my thoughts are. And when it comes to the stock market specifically, look, seasonality tells you don't fight this end of year rally. That is typically what happens, not every year, and there's not a certainty, right? But look, if all we are doing is going off of cycles and historical patterns, we should stay bullish. But that's not the only reason that I stay bullish in the stock market. And again, I should clarify, I have not been saying like, oh, I'm buying here. I've just been saying consistently that I think I still think there's upside to the stock market, but I wouldn't buy it unless it pulled back. So let me clarify. I have not been right in the sense that like, oh, I'm making a lot of money from the stock market rally. I've just mentioned that I am still bullish. I think there is still upside. The stock market can continue to go up, in my opinion, as long as you have strong fundamentals, which I think you do still have. I mean, if we look at am I still going to wait for pullbacks? Definitely. Like, I can't justify chasing. I have to wait for pullbacks. But there's not a reason for me to say it's time to short the stock market. There's just not. Technicals are up. GDP growth is really strong. PMI data, manufacturing PMI came in strong, stronger than expected. Services PMI, not so hot, but retail sales, strong data. Inflation's under 3%, which I think is, to be honest, the Fed's new 2%. We also have wage growth that's outpacing inflation, so consumers are doing okay on that front. Job openings here came in better than expected. ADP was a miss, and we didn't get the non-farm payroll or the jobless claims for this past week. Look, the story is growth metrics for the U.S. economy are still holding up okay. So I can't justify getting short the stock market when we have growth that looks strong, corporate earnings which look really strong, that's just not an environment where you want to try and time this top. That's my opinion on it. So I am a dip buyer until something changes. Like, go with the flow until there's a reason to be short. Hey, Nick, what'd you do with dollar yen? Yeah, I closed it. I mentioned this. I took profits on both of my dollar yen long positions that were shared inside of the VIP room. By the way, if you want to get access to this, we'll drop a link here in the chat. If you are interested in getting access to the trading signals that I am sending, you can see every trade that I'm taking, fully transparent, winners, losers, etc., by clicking the link that will drop here in the chat to where you can do that. Or if you prefer, you can scan the QR code. Check this out. Maybe we can do, just for a second here, if you need the QR code, scan it right there, and you can take advantage of what we got going on there. Oh, there we go. We have a Halloween theme for this. There we go. Scan the QR code if you want to send direct message to our team. Just let them know you're watching the stream and would like to get access to the trading signals, and they can give you some information about it. Do you think gold will go down soon? Man, people have been asking me that for months, and the answer is no. I have, again, consistently said in my videos, you don't fight this. So many people have fallen apart trying to short gold this year. It's been unbelievable. You know, gold is a roaring uptrend right now. You just don't fight this. I said in my Sunday video, I wouldn't be surprised if we just stay on course to 4,000. And I did not expect it to happen so soon, but we're at 39.35. Like, we're just at 3,800 a couple days ago. Again, the path of least resistance for this market, for gold, for precious metals, is up. Why? Because momentum is up. A really simple concept in markets is the trend. This is probably like the first thing you learned in trading. And unfortunately, most of us learn the hard way why that's such a simple lesson, right? You don't fight the trend. This is not, you know, any trend metric you want to throw on this, we're in an uptrend, right? Look at this on, you know, if you're looking at the daily chart, look at the RSI. When you have RSIs in overbought territory and the market refuses to listen, that's because you're in an uptrend, right? When you're in a downtrend, it's the opposite. We haven't been in a gold downtrend in a while, but when you're in a downtrend, right, oversold readings don't mean much. When you're in an uptrend, overbought readings don't mean much either. So again, every single day that we get a fresh green candle, traders are going out and saying, this is it. We're going to roll over. I had a bunch of people comment on my video. On this day, a bunch of people said the gold bears are back. It's crashing. And then we just did this. So look, I am not claiming that I know what gold is going to do today or tomorrow or the next day. But one thing I know is if you are trying to just fight this trend, tears in your eyes, fists clenched, it's a tough strategy to play. Trend is your friend. It's the simplest concept in the world. Don't fight trends. I'm not short the S&P. I'm looking for pullbacks. I'm not short gold. I'm kind of neutral on gold. Reason I'm not outright bullish like I was a couple months ago is because I think that the macro has started to fade a little bit of the story for gold and silver. Like, you still have sticky inflation and you have jobs data that looks rough, but then you also have some growth metrics that look strong. I think the dollar, like, one thing you really want to confuse people, gold is up and so is dollar. This always confuses people, but it can totally happen because gold trades against fiat currency as a whole. Even though it's quoted in dollars, it's still kind of precious metals versus fiat currency. That's euros, pound, yen, right? So with yen dropping really strong today, that's bullish for gold. So it can really throw people off. Why is gold going up when the dollar is going up? But they don't have a perfect inverse correlation. Sure, a stronger dollar, I think, actually could mute the price of gold a little bit, but they can both rise or both fall at the same time. So I am long the dollar. I have a long position on UUP, the ETF, on my stock brokerage account. I don't have any short positions on metals. I'm just neutral in metals, but I am bullish on the dollar. Have you seen AMD? What's going on with AMD? Oh my gosh. James, you own AMD. James, producer. 37% up this morning. Yo. James said check Discord. Wow. What happened? Multi-billion-dollar deal with OpenAI for AI data centers. Did this negatively impact NVIDIA? Yes, it did, but not too much. Minus 1.6 for NVIDIA. So AMD got some contracts with OpenAI for data center build-outs. That makes sense. Wow. Wow. That also probably explains why the NASDAQ is pumping here as well. My goodness, man, that's awesome. Congrats, James, and anyone else who owns AMD. That's a heck of a move there. Again, getting the setup to do build outs for OpenAI, very, very positive for I mean, you got to think they're the sellers of the equipment, right? They're the picks and shovels sellers, AMD, you know. And the reason I say that might be negative for NVIDIA is because NVIDIA might have wanted that contract or even have been priced to get that contract. I don't know exactly. I'm not following it that closely. But thematically, still very bullish for the NASDAQ, right? You just have so much money being thrown around. Like that's a huge spending plan. And one thing the stock market absolutely loves is spending, spending, spending. Government spending, Federal Reserve spending, corporate spending, right? CapEx spending is basically the idea that you have all these big corporations who are spending tons of money amongst themselves. The Mag 7 are pumping money into, AI, which means it goes to companies like NVIDIA and AMD and the rest of the crew there. And then, those companies are pumping money into other places. So there's a bunch of money moving hands and the stock market loves it. Once again, this is why we don't fight trends, because the AI trade is hype. And I've seen so many people on the AI thing saying it's a bubble, it's going to end negatively. And here is my official, if you ask me, Nick, are we in a bubble right now? Absolutely. But a bubble can go on way longer than you think it can. The classic example of this, we've talked about it many times on the channel. In 1996, we did this like a week ago. We talked about this. In 1996, Alan Greenspan, who was the standing Fed chairman at the time, stocks were going straight up in 1996. And in 1996, he said that the stock market was in a period of irrational exuberance right here. Basically, he said stocks are crazy expensive and that there's too much hype out there. Look what the stock market did the next few years, right? So are we in a bubble with the AI stuff? Definitely. But we don't know how far in the bubble we are. Is it likely that people will overhype the effects of AI like they have done with electricity when it first got announced, like with the internet when it first got announced? Definitely. That's what humans do. New technology comes and we all get so excited and overhyped about it and pump up the prices to no end. But that doesn't mean the end is tomorrow. We could have 3, 4, 5 years of AI hype ahead of us before the bubble pops, right? So are we in a bubble? Sure. I think everyone knows we're in some sort of exciting bubble that's either just starting or towards the end. The bigger question is not, are we in a bubble or not? For me, the bigger question is, what do we want to look for in terms of signs that something may be stalling or turning around? And the easy answer for me is number one, watch the macro, because if you get a slowdown in the economy, I think it will impact, it will start showing up in the form of corporate earnings, et cetera. So watch the economy, but GDP growth is still strong. Watch earnings reports from key companies, because when they start to slow down or signal that they are going to spend less on all this AI stuff, those will be your signs. But don't jump off the train just because it's going fast. Like we are pumping here to the upside. This is not a market you want to short, in my personal opinion, because again, just like gold, the people who have been trying to call the top on it, it's sort of like if I'm looking at the NASDAQ, right, and I'm saying this is a bubble, the problem is it very well may be, I might be right about that. But what if we still have 3, 4, 5, 6 quarters where companies put up remarkable earnings because of all the spending that's going on, and the NASDAQ looks like this, and then it does this? Was I really right? There's an old expression in the stock market: if you're early, you're wrong. It's not just the stock market, just markets in general. The saying goes, if you are early, you're wrong. Because look, if you say we're in a bubble and you short this market and the market erupts for the next 2 years and then drops, were you really right? No, you were wrong. Because again, you missed out on these gains. You could have bought trailed stops and made a lot of money on the upside. So I've been accused recently. I've been getting lots of people stoning me, right? These days, you cannot be a bear, because if you're a bear, you get stoned in the comment section. Just like, by the way, I got stoned in the comment section when I was bullish over here. I'm not bearish on the market, but I am cautious. Like I think that AI spend is going to remain. The economy is holding up. The Fed's cutting rates. There's not a reason for me to be bearish. But does that mean I need to buy today because I'm going to miss out on the gains? Look, I might miss out on some gains. I own a bunch of stocks already, but I'd like to own more. If we get a corrective pullback, then I believe the risk to reward to getting long makes more sense than it does right here. Even a 5 to 10% correction in the NASDAQ would give us, in my opinion, a much more attractive entry point to take on what is a serious risk. Because let me paint you a risk. What if we do start to see this earnings cycle? What if we all think it's like 3, 4 quarters away that we're going to start to see slowdown, or 6 quarters or 8 quarters or 10 quarters? I don't know. What if it actually slows down this quarter and we do see the stock market not just pull back, but actually crash, right? I don't know that. And it could happen. Look, people get the most confident and most excited at the end of market cycles. So trust me, there are serious risks to buying the NASDAQ. And most traders who are trading today have no idea what those risks look like. All you have to do is go back to 2000. The internet was a game changer in the end, but people did what they always do. They overhype something, they buy it into, the heavens, and then as soon as something starts to be a little less than perfect, the stock market crashed by a tremendous amount, 84% down on the NASDAQ. Imagine taking your whole count and 911 days later, you're down 80% on that account. That's what happened to a lot of people who chased the NASDAQ at the highs. So any sort of pullback in the NASDAQ, in the S&P 500, I still think directionally we are headed higher. But I want to materially improve my risk to reward in case I'm wrong by waiting for pullbacks. That's it. If that means I miss out on some gains, that's what happens. I'm first and foremost, when it comes to trading, is I'm a risk manager. Like, I have to manage my risk. I have to protect myself. Just buy the indices. The US and the rest of the world can't afford another 2000 and 2008 type recession. That's true, but they don't control it. If you believe, in 1929, everyone believed we would not have another serious downturn because the US was so in control of the world that, that growth would not slow down. If you have a growth slowdown, we will enter a recession. A true growth slowdown with huge national debt. I think one of the most repeated mistakes of history in markets is people start to believe this time is different and that we will not have any more recessions, that we will not have stock market crashes. That's what everyone says before stock market crashes. So again, I'm not saying I think the stock market will crash today, but I do think we will have serious market corrections. But in the meantime, I don't see the signs for that. In the meantime, I see dips as opportunities to buy and stay long this market until those signs start to form. Let's see, what else do we have going on? Dollar index pushing off these areas of support, or this area of support. Dollar index, I think, actually has some upside to keep going here. Gold still pressing through the highs here this morning. Really strong market open here for gold. We actually broke through another level of resistance at 3,900 level. Bitcoin also looking really strong. I mentioned I'd be interested in a pullback on this one, but again, you're just not getting many pullbacks right now, which is okay. You know, hey, if you're long of these things, then congrats, you're killing it. You've got some great moves here. So I'm interested in pullbacks if I get them. If I don't, then it is what it is, as they say. What else? Taking a look at the euro. Most currencies against the dollar are weak today because, with the yen kind of falling out of bed here over the weekend, right? Here's dollar yen. Dollar yen jumped. I mentioned earlier that I had two long positions. I had a long position here and a long position here. I closed out of both for a profit on the open of the stock of the FX market this Sunday. So I closed out of my dollar yen longs. Not to say I don't think it could continue up to 150, but I just took the profit. And if we do get a pullback, if we fill this gap, then I may look to trade it again. But dollar yen dropped off a little bit in score within the EdgeFinder. So dollar yen was very bullish within the EdgeFinder, has since lost a little bit of that scoring. So I just took the profit that was there. Taking a look here, let's just remove minor currency pairs for a moment. Dollar CAD, let's see if that's setting up for anything today. Dollar CAD. By the way, before I forget to do this, we're doing a giveaway for the EdgeFinder this week. So if you're interested in getting access to the EdgeFinder for free, let's do the giveaway. Here's how. Step 1, join the Telegram. You can scan the QR code right below my camera here, or we'll drop the link here in the chat. It is free to join. This is how you join the giveaway. This is the 2-step process. Step 1, join the Telegram channel, either using the QR code on the screen or the link in the chat. Step 2 is to find this message here. Join here. Okay, so once you're in the Telegram channel, there it is. Simply fill out this form to put your name in the hat for a chance to win our spooky giveaway. Look at this. Look at this marketing art that our team did. That looks great. We're doing a giveaway for the EdgeFinder, completely free to join. All you have to do is step 1, join the Telegram. Step 2, fill out the giveaway form, and someone's going to win it. October 10th is when the winner will be announced. So it's actually just a couple days. So best of luck. So there you go. Dollar Swiss getting a bullish reading, but I don't love the chart for dollar Swiss. So dollar CAD also getting bullish. Would love to see this one pull back. So this one's on the watch list. Dollar Swiss. Don't love the technicals on this one. NASDAQ, Dow, we already talked about these. Love them for buys, but would have to see a pullback on them. Dow Jones, same story. We hit the annual target. This was the year-end target for me on Dow Jones. We just tagged it, 47,000, which is crazy. Platinum, I don't really trade platinum. Bitcoin, let's take a look at Bitcoin. I mentioned this one looks really strong. Bitcoin also sort of loving the risk-on environment that we're in. Pullback to the 50% may not happen, but if it does, I like that pullback entry. Let's see, what else do we have? dollar CAD, dollar Swiss, platinum, Bitcoin, Chinese stocks. Let's just take a look at Chinese stocks. I'm just curious what they're doing today. Chinese stocks are doing really well here. You know who's doing incredible today is Japan. With the weak yen, less expectations for rate hikes from the Bank of Japan. We see the yen very weak. The Japanese stock market exploding higher here in reaction to this, up 5.2%. Guys, that's crazy. It's been one of the wildest stories. Look at the Japanese stock market. Let's just daydream about this. Let's just say you bought the low here. You're talking about a move in the Japanese stock market of 59% in 2025 from the low to the high. Pretty incredible. Due for a pullback? Probably. But again, the theme this year seems to be when something seems like it's due for a pullback, it doesn't pull back. It doesn't mean we should change our strategy because look, at the end of the day, markets don't behave like this all the time. We're getting some pretty anomaly type moves. Gold does not usually move like this. The NASDAQ does not usually just go straight up, without any pullbacks like this. These are rare moves. So I don't think we should change our approach. I think it's still prudent to wait for pullbacks, but can it be frustrating waiting for them? Definitely can. But again, where a lot of people will make mistakes is in an environment like this where it's very exciting and hype is very high and everyone sort of is super confident about markets, gold and NASDAQ, et cetera. Where I think you can go wrong is making the conclusion that this is the new norm. That's when the market will get you, is when you think like this time is different. This is the new norm. We're not gonna pull back. You have to be careful with that because again, a lot of traders will get themselves into a lot of trouble with that. So be patient, be prudent. I think we still stay with the trends that are happening, but it's okay to wait for pullbacks. And if you don't get them, it is what it is. You guys know the meme. Anyways, with that said, we are going on to our next show host. You guys got Ivan lined up here. We've got him joining the stream here, taking over for a little bit. If you're interested in private one-on-one coaching, by the way, Ivan does a great job with that. His specialty is helping traders to build strategies that work for them and specifically helping them with trading psychology, which does tend to hold back a lot of traders. Having the right strategy, having a good risk management approach, and having the discipline to stick to a strategy is the sort of core three things that traders need to have in order to have success with it. If you're interested in checking out Ivan's stuff, we'll drop the link to his channel here in the chat, and stay tuned. He'll be taking over the stream just after this quick break. How would you like to win a free copy of the EdgeFinder? Well, this month we are giving away not one, not two, but 3 free copies of the EdgeFinder to 3 lucky winners. That means if you join, there's a 3 times chance that you are going to be the winner of a free copy of the EdgeFinder, which is usually a $1,400 product. With the tools offered by EdgeFinder, you can track institutional positioning through the commitment of traders data or the put to call ratio to study what crowd sentiment is currently like on your favorite charts and assets. Or if you're interested in tracking macroeconomic data and how it could potentially impact things like gold, silver, commodities, currencies, and indices, check out our US economic heat map. This table allows you to see all of the major economic readings that things like the Federal Reserve are watching to set monetary policy, and these things drive trends dramatically. Or check out our economic surprise meter, which shows which currencies are stronger than others based on the economic data being released. And you can tie it all up with the top setups page that we offer within the EdgeFinder, which scans all of this data and generates bullish and bearish readings for your favorite symbols. So now that you know how awesome the EdgeFinder is and that we're giving some away for free, how do you join? Step 1 is to join our Telegram channel. We'll drop a link down below, or if you scan the QR code that you see on your screen right now, that'll take you over to the Telegram channel. That's step 1, pretty easy. Step 2 is to make sure you enter the giveaway using the form being shared in the Telegram channel. Simply fill out this form, takes about 1 minute, and your name is in the hat for a chance to win. And there is no step 3. Step 3 is, I guess, simply just wait to see if you're the winner. There's no harm in joining, so best of luck to you, and remember, 3 people will be winning, so make sure to throw your name in for a chance to win. Just to recap, step 1, join the Telegram. Step 2, drop your name in the form that can be found in the Telegram, and you're good to go. Now let's get back to trading.
And well, did I I didn't foresee this move going higher, but we did have a meeting yesterday where we did discuss, and I believe about 20 people of you could testify that yesterday we did mention yen weakness because the new leader of the LDP party now becoming the prime minister of Japan would lead to yen weakness because of her love for and become the first female prime minister in Japan because of her love for expansionary monetary policy and spending a lot of money to make the economy go great. And she last year allegedly said that rate hikes are stupid. Now, she might not say that now, but she's definitely on the camp of adding more money to the economy. And I don't know if that also means that we are not in a position to rate a hike by the end of the month. But I would argue that the market is like, well, I don't know about that anymore. So, my name is Ivan. Been trading for some time now. I am the yen man in the group, and I really wish you brought me in a bit earlier, Nick. But I know it's your show. You can do whatever you want to do whenever you do it. But this was a really fun move. But the only problem that I have with this move, as would make my life a bit more difficult, is that Aussie yen has reached the target that I believe the high we should have for the month of October. Generally, doesn't need to mean anything, but I believe that we shouldn't really go higher. We can, but we don't need to. Now, I had a bit of a meeting earlier, about 30 minutes, about an hour ago, and I was talking about unexpected events. And one of the key takeaways are how sustainable is this current move. And generally speaking, for these moves that we currently do see, not financial advice intended, but it tends to die off themselves. The faster they go higher, the faster they come lower. So for me right now, I know the FOMO is out there. I've seen traders commenting. There is a lot that there is FOMO, but I am more like, bruv, this is great. Let it come back. Let's get an even lower price than 97.30. Whenever the market believes that we're not going to cut hike in end of October. So I think it's pretty nice. I think it's pretty all right. Because it just gives me peace of mind. There is nothing more else to discuss on this one. It's over. It's done. It has been what it is. And now becomes the, what do you call it? Now it becomes the time where, are you able to self-control yourself? Well, do you buy now? Do you not buy now? And of course, reverting back to what we are supposed to be doing as traders. This is the market we're supposed to be in. This is what I not teach per se, but this is the market I want to be in. And once you start seeing these rises that happens very quickly, I'm not going to say that we are going to go lower, but if we see a reversal pattern, man, I'm not going to stand in front of that freight train, because what you are supposed to be doing here as a trader and what you should see as money flow is, the faster the market goes higher, the more people TP. And that doesn't mean that the move is over, but it's more and more and more and more and more fragile. How long will dollar yen stay bullish? Do you want my honest opinion on it? I don't think it's going to go higher. I think 150.40 was the high. It can. I mean, everything is possible at this point, but the move has happened, because you have to take a bit of psychology here. When I when someone punches you hard, it hurts. It's that's the same thing. It hurts in the moment, and then it slowly goes away. And the reason why I say it's just a moment of information that we now have is that we need an escalation. We then need this new person. It wasn't Takashi, was it? No, it was. But she is called what? She is called Sanai. It was Takashi. Okay. When Takashi comes out, and she will then try to, I don't know, make Bank of Japan change policy. Yes, that is an escalation. But right now, we're just pressing that she has a different policy outlook and a different mind. And then we're going to go back up power again whenever she tries to make new policies that would try to boost the Japanese economy again. But right now, I think 150 is more than enough high, generally speaking, because Aussie yen, let me go back to that one. Aussie yen has hit target. That is that one. That is Aussie yen, Euro yen, Pound yen, New Zealand yen did not, CAD yen did not. So 3 out of 6 has already hit target. That in itself isn't like what dollar yen didn't. So dollar yen itself, of course, can. That's an argument. But generally speaking, when more than about 4 out of 6 pairs hits a target on a currency, that generally makes the air of the balloon go out. So for me, that's a scary thought. And the easiest way to go forward with this is to say, okay, let me put my brakes on and say, okay, if I do then believe we're going to go up to, what did ball out say, 152? If we go up to 152, I know you didn't say that, but I'm just a number. If you go 152, okay, then let the market show that we're going to go higher. Easy peasy lemon squeezy, right? Show proof. Don't believe that the current move currently is a pullback to a bullish side, because the only way for a bullish side to still be bullish is for bullish price action. And trend trading, as you can see over here, isn't necessarily the market's isn't not necessarily a pullback. Sorry, isn't necessarily a bullish in this sense, because it's when what we have right now is just higher, and higher, and once you have a higher low, it's actually over. It better not go up, or I will go find Ivan. Min, where do I find you? Do you have like a nice open space in your town? I'll stand there where the fountains are if you want to find me. At least it rained on the last day of my life. Now, this is just market psychology, okay? I can be wrong, but then, as I said, I think it was last time we had this dollar strength out of nowhere, and I said, okay, if we're going to continue dollar strength, okay, let it go higher, and it didn't go higher; it actually fell down again. So that's your security. The same thing with gold, for that matter. Also had a bit of a run this morning. Okay, it is a whole other situation than Aussie and then dollar yen. Okay, as I've always said, I always want to pull back on this one. I don't really want it. I don't really want to buy high. And I had a. Where did I see that? Was it a DM or something? Somebody said that they lost money there on gold because they were day trading gold and gold fell hard. Okay. So when are you going to buy it again then? If that is your theory, when are you buying it again? When does it continue? When does the price action continue for you? So just because it hits you hard, just because there's a pullback now, doesn't mean that in the future it's always going to be. I think I was talked to somebody else. Is like, Okay, so if you're knocked down, are you just going to lay down there then? Like, are you a bag of potatoes? Come on. It's very easy to lose hope. It's very easy to lose strength. It's very easy to lose sight. But at the end of the day, the only way you're going to move forward and the only way you're going to learn from your mistakes, and I believe this is a mistake, because at any given moment, it doesn't really matter the assets. You have to cater for volatility. Volatility in the asset is absolutely paramount. And that's why we have something called stop loss, right? So if let's say 1% is the average daily range, ADR is 1%. Do you push your stop loss below 1 then? No, you should probably be around 2 or somewhere, further, right? So when your statistics tells you, hey, this is what we normally do. We normally do drop, and if I can tell you that, we normally drop, what, 2% or so in a drop? 2%? 2%? Okay, if a normal drop is 2%, I wouldn't be buying here. I'll be looking for the bottom. I will be looking for those 2% drops. And I would rather be buying down here than to try to catch something else, right? That's the flip. That's the script that I play by, because I really want you guys to be like, okay, where's the best price? Where's the absolute bottomless price you can ever get? And still be right about the trend. And I'm not going to mention names. I'm not going to mention who and where and how and what not. But there has been trading participants who has been fined by the CFTC for manipulating in precious metals and by sending markets lower, hard, rapidly, about 200 pips, and then higher, and then put it higher. So well beyond the target of other market participants for them to just buy it back up again. And it was the use of limit orders even. It wasn't even it wasn't actual trades. It was just open interest. You close your trade on dollar yen too ambitious at 155. Okay, I mean, you do you, mate. But again, what I said earlier in the meeting about an hour ago, take this moment and write down all the things you can learn from this event. This event isn't substantial. This event isn't abnormal. This event happens from time to time. It just changes names. Sometimes it's a rocket launch. Sometimes it's a trade war. Sometimes it's called a rocket man, and sometimes it's called a tsunami. We're always going to have, and that's a part of why trading is risky. It's because you're going to get unexpected events. Unexpected isn't because you are a bad trader. It is because there is a new piece of information that was not priced into the market yet. Now, this prime minister election, by all means, we should know. It is there. It is a very open information. But when is the next time President Trump is going to come up with new tariffs? And I sure believe it is going to happen again. I don't think it's over. Whenever that is, how are you going to act? Which assets are you going to be in? What positions are you going to be in? And if you are wrong about the positions, how are you then going to cover your loss as fast as you can? Because you've identified that the current environment is no longer what it previously was. And a trade war or an increase in tariffs, or for that matter, a decrease in tariffs, is a change of the current market conditions that would either send the economy into a spiral or actually going to boost the economy. At the end of the day, it's going to create a Forex exchange. It's going to create a commodity depreciation or appreciation, and it's going to send either SP500 higher or lower, depending on where on the books we are. But by the end of the day, your preparedness, your ability to understand, and your ability to remember, and your ability to put things into context and put things into a row of information so that when something happens, you are there, you are quick, you are fast, because you know that whenever these things happens, you're good to go. It's kind of like a red, yellow, green light. Do you stand there and you have your foot on the accelerator when you get a green light. No, you're supposed to be there right about the yellow one. Like, come on, mate. You know how to do like interchanges and red, yellow, green. That's not too difficult, is it? Because you do it every day. You do it all the time. But what happens if a person starts walking across the road? There is no zebra crossing, but you're going at speed. What do? Don't you adapt? You don't want to run over somebody, do you? So, why is it so different here then? Why is that a different case here? So for me, I have said for 2 weeks now or so. I think I said it over here. I said probably over here that I think yen bears are going to go higher. Okay, I was wrong short term. I'll admit. I had a yen trader over here, not this one. I had a yen trade. I bought about there. Stop loss about 97 or so, and then it went higher. Okay. So what did I just tell myself? I said to myself that if it turns bullish again, I'll buy. Okay. What did I say last night? I said I need a higher high, higher low. And then we go higher. That's not what happened. What happened was that we gapped higher and then we continued higher. Okay. Then I need to put it into my book of expectations or my events book and say, okay, when we have a Prime Minister event that is opposite of what the market is expecting, we're going to have a sharp turn higher, and that's probably going to be the peak, and that's the end of it. So, some YouTubers live says you bought the top. Yeah, okay, cool. I mean, I'm not going to say we're going to go low from here because I don't really know the truth from here. Because it all depends. It's actually traders actually getting out at their actual target, and do they believe that it's a sufficient target? That comes down to every trader. But the general market psychology is get out. We have gone higher very quickly, very much, and we haven't really made a higher high yet. So until then, the yen pairs are not necessarily dead. But I have mentioned a couple of other things earlier today, is that when we break lower and we start making lower highs, whatever bullish trend is dead. So for me, that is pretty straightforward. Pretty straightforward life, to be honest with you. But yeah. So on the other thing that I've said for October, I've said for October, we do risk on. And I would argue that we are quite a risk on the yen pairs. Dollar pairs, yeah, quite okay. And yesterday I said, if we come back down to 1680, I would be interested in buying. The only problem with me and my memory is that I forgot to put a limit order on. So I'm not in it yet, but here we go. And this one is supposed to go higher, right? At least for the month of October. And that's the same thing for pound. Same thing for New Zealand. Same thing for Aussie. And opposite for dollar Swiss. And opposite for dollar CAD. Now, is dollar CAD anywhere near my proposed theory about a risk on? No. Why is dollar CAD rising and why is CAD weaker? Because they have 1.9% inflation. They're absolutely doing not so great because of the tariffs or also the downturn in the economy and all of that. So they're not really having a good time around. So that's why you're probably not going to sell weak and something weak. So who is strong? Whenever dollar gets weaker, we have Euro go stronger, we have Aussie going stronger, we have New Zealand going stronger. And I also said yesterday, I believe that Euro New Zealand should go lower. And that is until about 7th of November. Did I get what I wanted this morning? Nah, we just dropped. So there is that. But give or take. If I get a pullback out of it, that would be great. I'll be looking to buy this euro dollar. No financial advice whatsoever intended, but I believe that whenever we are out of the woods with the U.S. government shutdown, and how long is it going to take? I don't really know. I don't really care. At the end of the day, it's just at the end of the day, it's whenever. When by fact it happens, there is no reason, there's no way for me to speculate. There is the thing is, market won't move because of it, and your trading doesn't change because of it. Because if euro dollar, so if the shutdown would send us into a frenzy or whatever, then yeah, sure. The only thing that I'm a bit worried about that might actually happen right now is that that their NFP numbers would be out at some point, because they're supposed to come back whenever the government is back up and running. And as I said yesterday, I believe that should happen the next day after the announcement that it's going to happen. So, so that, yeah, I don't think that's why we're moving out right now. But that would mean, and I believe we had a poll about that dollar won't move much. Probably some weakness, but generally speaking, some. Sorry, some range bound in the meantime. But yeah, it seems like New Zealand dollar, and I should have bought this about a week ago or so. There's your number one. There is your number two. So price coming down to this level is probably more like that'd be great. Right now we're a bit late, and my last resort here is probably that, and then hopefully it's going to continue higher. But of course, it depends. And say that okay, we actually are going to get out of this lockdown, then the weakness is over, and the spendage is back. So I hope that's going to be at least the outcome of it. So for me, New Zealand, euro, pound, again, way too high for me. So I need a break higher, pullback, and I don't have that. So that's weird. That's strange. Strange price action. It's just a range. So of course, it would be great to have a entry there, but that's not far enough for me. So doesn't work. Doesn't work. Doesn't work. Same thing for Aussie. Now, should this turn Aussie yen or yen pairs higher because of the risk on? Yeah, that is definitely the case. That is definitely the possibility of sending this one higher. But I believe that yen by itself, which again has been shorted to death, it's not going to have the same weakness as the other ones. So to me, I'm left with dollar pairs. Shorting it, and I am waiting for them to, I don't know, put themselves in a better position. To be honest with you, it's not really great, a bit too far, a bit too high, and not really the best. So that's kind of like what I'm thinking at the moment with my risk on scenario. And yen pairs last week didn't adhere to. Yen pairs last week didn't really adhere to what I wanted to do, and then it did this week. So that's a part of trading. That's a part of, should my stop loss have been different? Should I have done differently? No, I think I was okay. Would I do the same entry again? Well, now we know. So I don't have remorse about it, and I don't want to feel FOMO, but I just want to go back. More than anything else, this is my entry. More than anything else, I need to be at the beginning of a trend, not up here. So again, I'll try better next time, and right now I'll have off the rest of the day, at least on the end pair. So that's me. Waiting for a new high and then a pullback down to 1680, 116.80 on the euro dollar. That's kind of what I'm looking for right now. So until then, until tomorrow, until next week, I hope that you keep documenting what you're doing, you keep learning, and you keep writing down what today did to the end pairs, so that next time you are absolutely going to smash it. And I love you. So boom, I'll see you next week.
Hey guys, I just wanted to jump in for a second and let you know a little bit about today's live stream sponsor, DNA Funded. DNA Funded has very generous profit sharing, up to 90%, and 3 different unique challenge types. For those looking to get funded, they also have speedy payouts, unlimited trading days on the first and second phase of their challenges, a very wide list of different things you can trade with over 800 different assets tradable, and maybe the most important component, a very experienced team behind the whole operation. So if you're interested in learning more about DNA Funded, click the link, check it out, see if it's right for you, and make sure to do your own due diligence to see if what they have to offer fits your trading style. For 20% off, you can use code A1T20. Again, that will be 20% off any of their challenges you'd like to check out. Thank you again to DNA Funded for sponsoring today's live stream. Now back to the show.
Boom, it's me. So welcome to my segment of the stream. I like the way Ivan ends his streams with those little gestures. So hope everyone is doing well. Welcome to another trading week. We had some news over the weekend. Bitcoin is at all-time highs. We will check everything out in the next half hour. If you have any questions, any chart requests, or anything else, make sure to put it in the chat. Thank you, Lynn. Thank you, Slugmeister. So thank you everyone for the nice wishes. And let's get into the charts. Let's get into the markets. So let me see. What do we have? Bitcoin, all-time highs. So the new all-time high is 125,725. Pretty interesting stuff. I'm actually looking for buy setups. I'm looking at my EdgeFinder. I think Bitcoin was on there during the weekend. Yeah, Bitcoin is bullish. We can see it right there. So if it will open. Okay, so let me just filter it like this. Bitcoin. Yeah, so corn, bullish, score of 5, which is okay. COTS, institutions are bullish. Retail is bearish. Retail is bullish, so that's kind of a contrarian signal. Seasonality is good. If you check out the seasonality, the monthly seasonality on Bitcoin, you're going to see October is usually pretty nice. November is even better. So that's a good sign. That makes me be bullish. Trend is up, GDP is up, PMIs are negative, retail sales are up, CPI 1, PPI 1, employment is down, and interest rates are down. I mean, fundamentals are okay. The NASDAQ is roaring higher. So the NASDAQ looks good. Bitcoin seems to be following suit, following the NASDAQ. Now, this is a crucial level. So this is a key level of resistance. And I am a bit worried. I'm a bit patient because I don't want to see this break and retrace. So if the daily chart, if this candle can actually continue higher and close above, we still have 10 hours more. If we can do this, I'll get a green light to look for buy setups. But then I have a bit of a different issue. Then I think we're a bit overextended at that point because this is a 20 MA. This is a big impulse. Maybe a pullback is likely to happen. So I think the best trade idea for this one would be to wait for a break and retest. I think Nick is probably going to follow the same thing. I think Nick is probably going to have a similar game plan with Bitcoin. So that's my plan. During that pullback, we will approach the 20 MA. We will get some bearish candles. We will get some, exhaustion of the momentum. And it's usually how the markets work. So they break a level and then they retest the level. I mean, sometimes they fly, like in the case of gold. Sometimes they plus 1.5% for today. So sometimes they just break a level and never come back, like we saw right here. But that happens, part of the game. So that is my game plan for Bitcoin. Now, another similar thing I have, it's not really on the watch list, so I'm going to remove it from my watch list. It is really just interesting to see. Okay, that would be USD JPY. So I'm sure Ivan talked with you guys about this. It is, of course, the Japan Prime Minister election that happened during the weekend. And we had an unexpected winner, which was Takaishi. So I think, let me see, Koizumi was running number one. So Koizumi was running number one. And then we actually had Takaishi win the election. She was running second. So she was a runner-up. Now, what is interesting to see or interesting to note, Koizumi was supposed to be hawkish following the current Bank of Japan policy with raising of rates. Takaishi is kind of dovish. At least that's how the market perceives her, as being a dovish prime minister. So if we go to the BOJ interest rate graph, and we check out the 10-year, you're going to see that this is the path that we were at or we're in. Now, with the previous stance, let's say with the Koizumi guy, this was supposed to go higher all the way to 1%. But now with Takaishi winning, she's supposed to be dovish. This may stay the same, or there may even be some interest rate cuts. So she's a fan of Abenomics. That's a sort of approach to the economy in Japan, where they cut interest rates, inject a lot of liquidity into the markets, try to stimulate the economy, try to weaken the yen. So that made an unexpected reaction on the market open, on UJ especially. Basically, we gapped up all the way to 150. And now there's quite a big gap. What you do need to note is gaps usually get filled. I mean, all of the gaps eventually get filled. So we may not get a gap filled this week, but possibly next week or in 2 to 3 months, we should have the price retest this level. It's just a statistic of the market. It's just the way the markets move. They like to close gaps, especially in Forex. So may not be so much in let's say the stock market, in the Nasdaq, where we still have these gaps that haven't been closed. See right there. But USD JPY on Forex, US on Forex, they usually close, and they usually close pretty soon, because Forex doesn't trend over time. Forex actually stays flat over time, like this. It moves around the equilibrium, you can say. So just pure technical analysis is telling me that UJ specifically is still stuck in a big range. It still looks super flat. So I'm not having any trade ideas as of yet. Maybe if we break out of some levels, if we break out of this resistance right here or this support, maybe we can structure some trades. But until we do actually break out, I don't have any specific trade ideas, because we can just remain stuck in this range, especially if we hunt for sort of filling this gap, and then we just stay range bound, stay inside of these limitations. Let me check what you guys are saying. So let me run through the comment section. Hey Martin, what's up? Thank you, youngest millionaire. GPUSD, gold. How do you prompt ChatGPT to give you trade signals? So, okay, this was a question, Matthew, says, how do I prompt ChatGPT to give me trade signals? This was a question I had on my last stream. So let me open it up. I think I can open ChatGPT here. I should be able to. Why not? And go to ChatGPT trades. So this is a specific sort of folder where all of the trades are located. And the initial prompt, if I can go all the way to the initial here, this is the initial prompt. So this is the initial instruction. For those of you who don't know, I'm doing an experiment. I'm doing a challenge where I trade against ChatGPT. So basically, ChatGPT gives me 2 trades per day, one on the S&P 500, one on a major Forex currency pair. And you can pause this live stream and read this. I'm not going to read it now. And I actually started to trade this challenge on a DNA funded account. So also, if you guys want to get funded, if you want to expand your capital, you can do so, and you can get a nice discount with DNA funded. You can get 25% off with the code A1Live. Okay, so 25% off any of the challenges. Good prop firm, reliable prop firm. There's serious people running this prop firm. So this prop firm can be trusted, whereas I would say 95% of other prop firms in the space are just here for a few months. You pay the challenge. If you do pass, they usually are gone. Kind of the prop firm disappears, and you lose the challenge fee nevertheless. So when you're choosing a prop firm, you want to go with a reliable prop firm. This is the challenge I have. So one of the challenges, 50K just for testing ChatGPT, currently down minus 0.82%. And I think I can show you. I'll open up my trade locker in the next stream. But basically, yeah, a little bit down, a little bit negative. And this is the equity curve. Yeah, so pretty much you can see from the equity curve how the performance has been. This is the equity curve. So we have mostly been in drawdown, and then ChatGPT actually had an interesting trade on USD Japanese yen, which I can show you if I open up a new layout. Let's see, USD JPY on Oanda. Yeah, so what ChatGPT basically did, it bought UJ on the 1st of October at noon, and then it held the trade through the weekend. And through the weekend, we had this news of Takaishi winning. Again, she's dovish, so yen lost a lot of value when we opened. So this trade became a very big winner. This was a cool example. That's why you see this nice spike in the equity curve. Okay. Anyways, getting back to the comment section. Let's see. Ballout wants to be Marco for Halloween. Okay. Thank you, Ballout. Okay. Stagnant markets. Yeah, markets seem a bit stagnant. Slugmeister says take on GBP/NZD. Sure, we'll take a look. Forex is not flat. Well, I would say it's flatter than the stock market. I mean, we can take a random example, like look at the Nasdaq on the monthly chart. It's just in a massive uptrend. Now take a look at, let's say, euro dollar. See, I mean, you could say we were in an uptrend and then in a downtrend, but pretty much we're back at the levels from 2003. So let's take another example. Let's do euro yen maybe, or let's do UJ, this DJPY. I think that should have a lot of data. So this is UJ. And again, is there a definite trend, overall trend? Yes, you could say an uptrend, but so then we were in a downtrend first. Now we're in an uptrend. But I would say the stock market, you have a much bigger edge if you just buy. So if you just buy and focus on buying on most of your trades, Free Fire, I think this will get you banned. So please don't spam. Okay, Nasdaq. We have police officers in the studio, so I think you will get banned if you keep on spamming. Yeah, this is in a massive uptrend. Okay, while currencies not so much. See, so that's what I mean when I say currencies are sort of running around the equilibrium, running around the center. Let's say, I don't know, let's say here, that this is the equilibrium on a large scale. So getting back to it. So let me run through the requests. GBPUSD was the first request. Let's take a look. On the daily, I can tell you, I can only share with you my personal opinion. So my personal opinion on GU is I want to sell. I think the pound is short-term bearish, long-term bearish. Actually, let's check the short-term. So let's do the economic heat maps. Neutral short-term, but long-term definitely bearish. So dollar, I'm kind of bullish on / neutral. Anyway, I would like to sell GU, but I would like to see a breakout of this level of support. So I would like to see this support get broken with some nice momentum. And then I would maybe consider some sell setups. Okay, like this. I don't want to buy. I definitely think fundamentally GU is weak, so it's good to sell GU. I think we're also stuck in a range right now. Because of that, I don't want to sell immediately. I don't want to get stuck in a sell position and have to pay negative swaps. I think there's negative swaps. Let me see, carry trade, GBP USD, GBP USD. Okay, so you actually get positive swaps if you sell. Okay, that's good, but still I don't want to get stuck in this position to sell. That's my take. Gold was the next one. Gold and silver I'll package in one sort of analysis. Just flying like crazy. It looks overextended. Am I looking to sell? Definitely not. So I definitely don't want to sell this market. It's super impulsive, a lot of momentum behind it. I'm looking for a pullback. So I'm looking at a support level to actually execute some buy setups. I want to get a discount. So I think once we do get a pullback, so this could be running for a long time, but once we do get a pullback, that pullback can be drastic. So it can erase a lot of the gains that you already have, right? So I don't mind this exploding higher because I know the bigger the explosion, the bigger the pullback, if that makes sense, the bigger the correction. And it's just the way I trade, just the way that my plan works. In my trade plan, I cannot justify hunting these all-time highs. But it's bullish. It's looking great. Market environment is bullish for gold. Inflation is high. If you look at inflation in the US, 2.9% above the target. You have rate cuts incoming. That's going to put fuel on the fire. Okay, so that's going to definitely put fuel on the fire. And you have Trump's big, beautiful bill coming in 2026. So that big, beautiful bill introduces a lot of government spending, a lot of debt, a lot of printing of money as well. So basically, inflation is going to go up. I mean, it's not definite, but the probabilities of inflation going up are really, really high. So I know this, Nick knows this, Chris knows this, a lot of other big investors know this, and they are all buying gold. So that is why fundamentally gold and silver are looking like great opportunities. If you guys want to get the EdgeFinder, you notice me using it pretty much for most of my fundamental analysis. I use it every day. It is one of the most important tools for me to take a buy or a sell setup. So if you want to get the EdgeFinder, you can get it for 45% off with my discount code, which is MARKO. This discount code also works for the A1 Discord. Okay, A1 Premium Discord. All of the information is in the description of the live stream. But basically, if you want to get my trade signals, trade analysis, fundamental events breakdowns, daily forecasts, general interaction in the chat, or connect with me on Discord, send messages, you can do so by joining the premium A1 Discord and get a nice discount with this code. Okay, so if you want to replicate what I'm doing here, currently I'm in free winners, Aussie CAD. Wow, Aussie CAD doing very nicely. USD CAD and Euro CAD. Okay, Euro CAD was around break even. Now it's starting to go up a bit. And I took, I'm not going to go through the previous trades, but I took some nice trades as well previously. Anyway, getting back to it. After gold, we had GBP NZD from Slugmeister. So GBP NZD. Let me first check for the New Zealand dollar. Let me see. So New Zealand here. Okay, so short-term bearish. Now, both currencies, in my opinion, are bearish long-term. Short-term, the pound is neutral, New Zealand is bearish. So we also have the RBNZ cash rate statement, and they're gonna cut interest rates. That is at least the prediction. So that is, of course, bearish for the New Zealand dollar. That is happening on Wednesday. Until that happens, I'll most likely pause with the New Zealand dollar trades. So I did tell you I'm looking for buy setups on Aussie NZD, but I won't take anything until Wednesday, until I get more clarity, more information on what the RBNZ thinks. They're very important. It's very important to note what their future projections will say. And then maybe I can add a confluence to sell the NZD. I'm bearish on the NZD. That's why I don't like GBP NZD, because I'm bearish on the pound and then I'm bearish on the NZD. It doesn't really create a massive trading edge for me. And it kind of looks, I mean, it's going up, it's trending up, but I think we're stuck at this resistance level right there. Okay. So I want to trade currency pairs where one of the currencies is strong, the other one is weak. If both are strong or both are weak, there's very little edge in that sort of a trade, at least for me as a swing trader. Maybe for short-term traders, maybe for day traders or scalpers, they can find an opportunity on GBP NZD. For me, I am being patient. So okay, let's see. Aussie CAD. Aussie CAD was a signal in the A1 Discord. It was a pretty nice trade. So we just got in. It was like minimal drawdown. Touched the 20 MA. I was waiting exactly for the 20 MA as well as a retest of this level of support. We bounced off quite nicely. Stop loss is now trailed below this swing low, so just around break even. Currently running around 1.35 R. And yeah, my game plan is to just continue trailing this position. So if it does continue higher, my game plan is to just keep moving the stop loss below the swing lows. And then once the market wants to reverse, once the market wants to print a bend at the end of a trend, I'll be out. So that's the game plan. I want to squeeze out the most of this move. It's positive swaps, so I'm getting paid to be in this position. How do I know it's positive swaps? Well, I go to the carry trade scanner, AUD CAD. See, positive swaps, buy. So I don't mind holding this position. If the market wants to keep me in for the next 2 to 3 months, I'll be completely fine with that. I'll just keep collecting positive swaps and just gonna be chilling with in this position. Is it still Time to get in. Well, personally, if you do want to still get in on a buy setup, I think the CAD is currently the weakest currency, both short term and long term. Okay, for the CAD. And I think the Aussie is doing nicely. The Aussie is strong, but I would wait for a bit of a pullback possibly. So pullback maybe to the 20 EMA, and that would give you a nice reward to risk. So if you do want to get in, wait for a bit of a pullback first, maybe to the 20 EMA. Ballout says printing lots of money, causing gold to go up 8 to 10K, and the largest holder of gold will pay off some of its debt with gold. Okay. Thank you for the gold analysis. I have been waiting for a pullback for almost more than a month now. Me too. How do you create a narrative with fundamental analysis? What info do I watch, and how do I weigh them against info from other currencies? So that's a good question. And I would say that the most simple explanation that I would give you is, well, EdgeFinder is a massive help. What I do is I divide the data that's coming in as short-term data and long-term data. So short-term data, let's take a look at the CAD. Short-term data, very bearish. So the CAD is doing very bad, right? Only 12.5% of the data is coming out better than expected. Now for the long term, I look at the GDP trend. All over the place, not looking the best. Then I look at the unemployment for the CAD. Give me just 1 second. Okay, I'm back. So unemployment is rising, which is bad for the CAD. And then inflation, CPI, is around 2%. So not a lot of room to cut interest rates to stimulate the economy. And if you check out the housing prices in Canada, they're actually falling. Okay, so housing prices in Canada have been falling for 2 years now. Now that's a big reason why there's less demand for the CAD. So both the short term is bearish and the long term is bearish. Now you want to sell the CAD and you want to use a strong currency to do it. Example, let's say it was the Aussie. So short term with the Aussie. Short term is bearish because only 42% of the data is coming out more bullish. So short term kind of mixed, but long term, Aussie looks okay. Whoop. It looks better relative to the CAD. GDP is nice. It's positive. Unemployment for the Aussie, 4.2, steady, much lower than on the CAD. Inflation for the Aussie, actually above the target, but the trend is down. Okay, and it's all about, for the long-term data, it's all about the trend. So the trend is lower. Now, I have established that the Aussie is bullish. When I combine all of the factors, Aussie is bullish, CAD is bearish. Okay, so I want to buy Aussie CAD, which I did. That was the trade. It's not going to work every single time. Probabilities in trading don't work 100% of the time. Okay, you cannot win every single trade. It's mostly like 50-50. You know, most traders have 50% win rate. The best of the best traders have maybe 60, maybe 65% win rate. It's important to have bigger winners than losses. If you can keep your winners far bigger than your losses and have a 50% win rate, you're doing great. You're already in the top 1% of traders. You're gonna make some very nice gains. Okay, so it's not about the win rate, it's about the reward to risk. So I hope that helps. I hope that makes things a bit more clear. Slugmeister says New Zealand USD price action looks neat. Okay, let's see. NZD USD. Let's check it out. NZD USD. NZD USD. Yeah, so I would sell the NZD USD. It's in a downtrend, I would say. Not the prettiest downtrend, not the most powerful downtrend, but it is in a downtrend. Would I sell it right here? I don't think so. I think there's better opportunities out there. Again, on the NZD, I prefer, okay, so we have a bearish reading from the EdgeFinder, which is nice. I prefer buying Aussie NZD than, because this is a really nice uptrend. You know, this looks very, very impulsive, than selling NZD USD. So the technical analysis with this one is just not the best, not the greatest. Let me see. I think I had a buy position. Okay, yeah. So I had a nice buy position there. That was a long time ago. That was back in April. Yeah, I think there's better opportunities out there. Euro dollar was a request as well. Well, both currencies, in my opinion, relative to other currencies, are strong. So I like the euro. I also short-term like the dollar. If we look at the DXY, the dollar, I think, looks pretty healthy. Okay, I think there was a lot of people short, a lot of people selling the dollar. Then they weren't expecting a hawkish Fed. Rate cuts are coming, but they seem to be already priced in. So any commentary that is hawkish from the Fed makes the dollar gain value. And I like this. I like this momentum. I think short term, there's more room for the DXY to go up. Long term, I think will be a range. What I don't think is going to happen, what the probabilities don't seem to be saying, is a sell-off on the dollar. So a sell-off on the USD, I just don't see happening. I don't see the current catalyst. What would be the massive catalyst to sell the DXY? I don't see it. So for euro dollar, both currencies I'm kind of bullish on. That means there's not a huge edge in buying the euro dollar or selling the euro dollar. I think there is better opportunities out there. Okay, so euro dollar, I'm being patient on. I don't like to execute setups. There's not enough polarity there. Okay, we have approached to the end of the stream. I'll go on for a bit more, but I'm just running through my watch list. So the NASDAQ, I want to buy, but I'm looking for pullbacks. Let me see the S&P. What is the S&P doing? So S&P is up on the day. Yeah, NASDAQ, same thing as gold and silver. I want to get in, but it's just looking so impulsive, so overextended that my trade plan, my strategy does not allow me to hunt this price and to just hunt these all-time highs. So Bitcoin, I told you that I would look for a break and retest of this level. So we have this level of resistance. I would like to see this. And then I would definitely, or not definitely, but if everything stays as it is, if the EdgeFinder is bullish, as it currently is, Bitcoin, I would look for buy setups. So Bitcoin, I like. I think it's a good opportunity. Aussie NZD, I'm waiting for the RBNZ statement cash rate on Wednesday. I'll see what they have to say. I'll see what they have in terms of future projections. Aussie CAD, USD CAD, just trailing the positions except the USD CAD, where I do have a take profit set. So if the price hits 1.39982, I will be out of this trade. CAD, the worst currency out of them all right now. I think it's a good plan to sell the CAD, and that's exactly what I'm doing. So just to mention it once again, if you want to get funded, if you want to look for a reliable prop firm, check out DNA Funded. So again, most prop firms are super shady, super scammy. They have very low pricing. DNA Fund has competitive pricing, but it's not extremely low, so you know it's not a scam. But you have a discount code, A1Live. And with that discount code, you get 25% off, and you get a very, very good price in terms of the other competitors, in terms of the other reliable prop firms. Okay, so that's why also I recommend DNA, because you can get a competitive price for a reliable prop firm. So that's it from me. You guys can catch me tomorrow. I will be live streaming tomorrow as well. Pretty much I'll be live streaming the whole week, so you can catch me here on Trader Next channel. Thank you very much for watching. For the comments that I missed or didn't have time to do, I will go over them tomorrow. So just come back, put it in the comment section, and I will run through the charts. Thank you for watching. Thank you for the nice birthday wishes, and I will see you tomorrow. Goodbye.
You've been watching A1 Trading Live. We're here Monday through Friday, where you can tune in to hear insights from professional traders from all over the world. Make sure to subscribe for future streams. And as a reminder, if you're looking to get access to free courses, prop firm discounts, and free trading tools, head over to a1trading.com. See you next time.